as a CPA looking in from the outside, we know of, let's say, all the tax law changes that did occur and may occur again. We know how those are going to affect your company. Whereas an inside CFO may be too busy doing the day-to-day stuff to do any planning for the future.
You're listening to the best doggone money advice with John Neal and Tucker, the rescue dog.
As we get going here, I prepared myself to talk about the differences between, what a CFO or even a fractional CFO, which is what you do, and a CPA does, which is also what you do. So let's take some time during this podcast to talk about the differences so people can get an idea of what they actually need to help with their finances. Sound good?
Sure.
All right. So I've got them written down here. There's a couple questions I have here. Obviously, let's start off with what's the main difference between what a CPA does and what a CFO does? Because, it seems like they kind of intertwine.
As you know, CFO stands for Chief Financial Officer.
Right.
And CPA stands for Certified Public Accountant. So a CFO is more in charge of directing the direction of a company, both from a finance standpoint where you're looking at cost projections, cash flow forecasting, bank financing, things like that. A CFO does not have to be a CPA. We have a few clients that their CFO has a finance background versus an accounting background. But CPAs do make good CFOs because they're very analytical. They can break down complex ideas into fairly simple structures. When we were working with a construction company, we went in kind of as their outside CPA because one of the owners was acting as the CFO, and we looked at their cost structures and found out that they could increase their income by about 30% because they were missing a fairly significant item in their bidding process. So, a lot of people call themselves CFOs just because it sounds good, but they aren't necessarily. Whereas a CPA, you have an accounting background. Outside CPAs, like in our case with a lot of our clients, we're the ones that prepare the tax returns at the end of the year. We may do some forecasting as far as cash flow and pricing analysis and break-even analyses, and we can kind of help the CFO in doing his share of that too.
Right. So that kind of leads me to, as a business owner, we might get confused what the term CFO versus, well, not really confused what the terms are, but what the actual duties of a CFO versus a CPA versus a CEO, right? A lot of times with smaller businesses, the CEO they're trying to handle everything. They're doing the bookkeeping. They're doing, other than filing the taxes, they're handling the bookkeeping themselves. And so how have you found that some of these business owners confuse the roles?
Some of it is they're talking to their friends or their business associates, and the business associate is like, yeah, we've got this CFO doing great. And it's, if Joe has a CFO, I must need a CFO, so I'm going to go out and get a CFO where they don't need one.
Right.
They don't have enough work and they don't have enough revenue to have a full-time CFO.
Here's the benefit with working with you that I see is that you're a CPA who offers fractional CFO services. So when you have both CPA and CFO titles that you can offer, I guess the benefit, why don't you just tell me what the benefit is to your clients of being able to play both roles?
Well, I think one of the main benefits is kind of the continuity. As a CPA looking in from the outside, we know of things that are, let's say, all the tax law changes that did occur and may occur again. We know how those are going to affect your company. Whereas an inside CFO may be too busy doing the day-to-day stuff to do any planning for the future. I think that's one of the big things. And then, as I said, as a CPA, we are very analytical. A CFO should be analytical, but they aren't always. and from a CPA standpoint, doing the analysis and looking behind the numbers and whatnot versus just trends is very important.
Yeah, I mean, how do you separate the hats? You're wearing a CFO hat and then you're wearing a CPA hat, or is it a two-sided hat as you're working?
Yeah, I don't know that we do separate the two. We just go, hey, based on what we know, this is what you should be doing.
Can you tell me, like, let's talk about maybe a specific instance, and it doesn't have to be a tax situation. Maybe somebody came to you with like a tax situation, and you actually stepped in, and they needed a little bit more than tax. They didn't realize it, but when you stepped in and did some fractional CFO, whether it was titled that way, or I'm not sure, when you're working with somebody saying you say you need a fractional CFO versus you're like, well, I'll just maybe you don't even label it as a fractional CFO. You're like, I will do this work. This is what it's going to take. Maybe the first 2 or 3 months is going to be a little bit higher in retainer, but then when we get back to CPA services, that's going to end up in here, but let's get you there. Can you tell me about a situation when somebody came to you that needed a little bit more than tax help? They didn't realize that you came in, and what the results was from that?
It was a number of years ago. A construction company called us and said, we just don't feel like we're getting good service from our CPA firm now. And I went down there and we talked, and I was looking through their books, and I'm like, why haven't you changed your labor rate and your burden rate? You're telling me that your workers' comp has tripled, your premium has tripled in the last year, and you've done nothing to change your rates. You're losing money. This is one of the reasons you're losing money. And she's like, well, how come my old CPA firm hasn't told me that? And I'm like, I can't tell you, but I'm assuming that's why you're calling me. So we ended up going down to their office on a weekly basis, sitting down, going through. I mean, they had 2 or 3 people in their accounting department doing the bookkeeping and entering the invoices and the bills and whatnot. And we would just sit down and go through all of their projects. And one of the owners, it was a family-owned business. One of the owners is like, I'd say you're going to lose money on this job. And he'd go, well, how can you tell that? We just started it. And it's like, well, because of this, and this. And sure enough, they ended up losing money on it. Their timing was off and whatnot. And we got things squared away as best we could, and we did some bank financing and whatnot to keep them running. But that's the kind of thing, and in essence, I kind of just fell into the CFO role because of what they needed.
Right. So digging a little deeper, so when somebody needed a loan, how are you handling as a CFO or a fractional CFO? Are you like doing all the small little things it takes to apply for the loan, know where to go for the loan?
As a CPA versus a CFO, as the outside CPA, I deal with every bank in town basically. And so I know where to go versus being a CFO in a company. You go to your bank, and if your bank says no, well, what do? You talk to the bankers and go, hey, I've got a electrical contractor that's looking to do this, and this. And they go, we don't want to do any construction.
And they wouldn't know that without having that insider talk. And so working with all these individual banks, whether they're local, national, or whatever, just gives you that insider knowledge. Just because of having that CPA inner working gives you when you put your CFO hat on, it kind of, you're able to know where to direct, at least when it comes to funding and things like that.
Correct.